Welcome to Commerce GYAN. Now, this is our part 4 of Basics of Accounts, which we are going to cover the journal entries. This is a very important area of accounting because accounting starts from journal entries. Now, another important thing is that we have already covered in the first 3 parts all the details which relate to the meaning of accounting, objects of accounting. Then we have covered the important terminologies that are associated with accounting principles and conventions, which form a very in-depth theory base for accounts. And at the same time, we had covered types of accounts and the golden rules associated with those. Now, if you have missed out on that and you have directly come to this video, you can also refer to the playlist of this video. And with this, you can actually learn the previous 3 parts also if needed. How to get to the playlist? So you can just go to the channel Commerce GYAN directly, or if you don't know the channel path, then you can go to Commerce GYAN channel YouTube. You can just type it here. And you can see this particular video introduction to Commerce GYAN channel. Go to this video where you will find my channel details here. You can go to Commerce GYAN. You can subscribe if you have not already subscribed. Then go to the playlist. Once you go to the playlist, you'll see your Basics of Accounting playlist where you'll have all the videos in this. So once you say play all, you will have one by one all the videos, part 1, part 2, part 3 of this Basics of Accounting. So this channel, Commerce GYAN, is going to keep giving you free resources for accounting knowledge, not just accounting knowledge, but also overall commerce knowledge as such, where we'll be studying different subjects with the help of videos and illustrations and other specific things. So it's going to be a full-fledged detailed understanding in terms of commerce. So all you have to do is you have to just subscribe to this channel, click on notifications icon. So as soon as I upload a video on this channel, you will get notified and you can start learning the new resource. So what are we going to learn under this journal entries and this section of the video is basically what is a journal, right? Meaning of a journal, how double entry bookkeeping system is applied in the case of journal, and features, importance, and format of journal. Okay, so that will be the basics. And also, very interestingly and important, we are going to take 2 illustrations which will help you to understand how basic, you can say, journal entries are written. So since it is the first time that you're writing journal, we will take it slow and we'll take some simple journal entries in this video. And then in the course of further videos, we are going to do complicated journal entries, which will polish your knowledge of how to write a journal. And if you know the journal well, you will easily be able to format a ledger, a trial balance, and the balance sheet. So what is a journal now? We need to understand what is a journal. See, as soon as a transaction happens in accounting, what we do is immediately we will record it in the book of account, which is called as journal. So we can say that a transaction once occurred is first recorded in the journal. So journal is like a primary book of entry. As soon as it happens, you have to record it in the journal. So suppose imagine a person is going to a shop and he purchased something and he came back for the business. Let's say he bought stationery and he came back to the business and the stationery was used in the office. What should he do? He should bring the bill, invoice along with that stationery, give it to the accountant, and what the accountant is going to do, take the bill, see how much amount is spent, whether paid in cash, whether he paid through a bank transaction, what was it, and based on that, he will record it in the books of accounts immediately. This particular transaction is recorded in a specific format. Now, these days, it's the age of computers, so we have different softwares which can record the journal. And in fact, even in those softwares, it's the duty of the accountant to understand the transaction well and then put it as a journal entry. So you have to be very specific when you are making the entry. If you don't know the accounting rules and you can say the basics of accounting, it will be difficult for you even to enter in the softwares of the of accounting. So you have to be clear on your accounting concepts, and you cannot say that, okay, it's a software, so I can do whatever I like, and still the software will be I mean, still the work will be error free and the software will take care of everything. No, not necessarily, right? So you have to be, the journal is a part of an accountant's life, which will be important in case even in a computerized environment. Journal was derived basically, it's an interesting thing, which you can see. The journal word came from a French origin, and jour was something which was meant to be as day. So the day wise recording of transactions is done in the journal. Now, since that we have understood the word journal, let's proceed and understand what it means in a double entry bookkeeping system and how it works in a double entry bookkeeping system. So if you say double entry means two sides, right? If you remember the dual aspect of accounting, which we spoke about, it said there are two sides of every transaction. One is a debit and another is a credit. So even in double entry bookkeeping system, we follow this rule that every single transaction will have two sides, two parts, which will be basically the debit part and the credit part. Okay. Now, in this case, when we are talking about journal and double entry combined, that time what it means, whenever a transaction is recorded in the journal, it will have two parts. One is a debit, one is a credit, right? This aspect, as I just mentioned, will be covered under the dual aspect accounting system. So whenever you get a transaction and you find that, okay, the debit and the credit are not equal, that means you have made some mistake. This is where you can identify your errors in journal entries. When we speak about a journal, another important area will be the features of a journal. What is a journal? I mean, how do you really distinguish that, okay, this is not a ledger but a journal? Then we know that it is basically a primary book of entry, which we just said. Then transactions will be found in chronological order. So suppose you are talking about a month, let's say April, and a transaction took place on 2nd April, another transaction took place on 8th April. Then what should we do? Can we wait for the 30th of April and say, okay, now I'll start recording the transactions? No, it's better to do it on day-to-day basis. And when you're doing it on day-to-day basis, what will happen? It will go in chronology. It will go like 2nd April entry will come first, then 8th of April entry will come, right? So you cannot record it ulta fulta. Fine. Now, it serves as a further account keeping. So basically, when you record transaction in a journal, what will happen? The journal will be useful, be very helpful in recording it further into a ledger. So whenever you have a ledger, that ledger accounting system is going to be after you record it in the journal. So you cannot skip the step of journal whenever you're recording in accounts. The first step has to be done, and these days softwares are so beautifully designed that once you enter into the journal, it gives you the balance sheet, right? So but the role of an accountant is very much of key importance still when you're talking about a journal. And at the same time, as a person who is doing accounting, you have to also be very careful as to whether that software is doing its job well, because there could be errors, right? So if you have to identify the errors in that particular software, then it is necessary to know how it is written perfectly. If you yourself are not perfect, then how are you going to find the errors in the system? Fine. So this is very important to understand, because many people keep asking me that, okay, these days, do we really need to think of accounting as a very serious thing? Do we really seriously study accounting? Yes, you have to seriously study accounting, because even if it's a world of computers and softwares and AI and everything, it's not going to help you if you are not having the basic knowledge of that subject. Now we have already understood the features of a journal. Importance of journal is on those lines only, because you get to keep timely records, right? Because as soon as the entry happens, you are going to write the record. So it's time to time you have the record keeping. Further accounting is done because from the journal you proceed to the ledger and other accountings. Transactions, all the transactions are recorded. So remember, this is a very essential, important part of journal, that whether you buy a fixed assets like machinery, or whether you buy a simple 10 rupee pen for your office use, day-to-day use, everything is recorded in the journal. So journal does not distinguish between any, you can say, large value or small value transactions, whatever happens as a transaction which is having some monetary association with your business, it will be recorded. Fine. Primary source of information, this by now we know that since it is the first book of accounting, it's going to act as a primary source of accounting, and naturally it's a reliable book because it is used for further accounting parts, right? So this is the importance of journal. So if you see the format of the journal, take the first part on top, what is written in the books of, right? So in the books of means what? Basically, if I am writing in the books of, let's say, Shri Enterprises, for example. So Shri Enterprises will be the proprietor or whoever, the company name, whatever we write, it will be in the books of that person. So as I told you, we have learned in separate entity concept that whatever transactions are written, it's written from the angle of the business. So business is the core point, and hence we write in the books of that business name. Okay, this is one thing. Second, journal, when we are talking about journal, is the heading given to state that we are writing a journal. There is nothing more to that. And what are the different columns in the journal? If you see, first column is date, of course necessary, which date the transaction has occurred, and we write that transaction on that specific date. Second column says particulars. Now in this particulars column, you will have the debit or the credit account, whatever is there, and you will also have a simple thing called as a narration. Narration means what? When we are talking about a story, what happens? We narrate a story, we speak about something, right? So in this case, what are we speaking about? We are speaking about a transaction. So that transaction, the details of that transaction will be shown as a narration. Remember this. Then ledger folio. Ledger folio means from the journal, when we write into a ledger and we want to hunt for that particular or find out that particular transaction in a ledger, where to find, right? So we need to write a page number, which is also called as a ledger folio. So when I move from the journal into the ledger, searching that same transaction becomes easy, right? Then comes debit column, credit column. Now here I'm writing the amount in rupees. If you're from some other country, it will be in dollars, in euro, or whatever. But when I write a journal in India, we are writing what? The debit into bracket rupees, credit into bracket rupees, meaning whatever transaction part of that transaction is debit, that debit amount will be written in the debit column. And whatever transaction part is credit, that credit amount will be written in the credit side. Correct? So this is how the format of the journal looks like. Now, as we do the illustrations, you're going to get a very detailed idea about how we write in this particular format. So don't worry at this stage. At this stage, just remember the columns that are in the journal: date, particulars, ledger folio, debit amount, credit amount. So this is the format. Now we are moving to a very important part, which will be the methodology, how we write in the journal. We are going to write in the journal now. How we write in the journal? We know the format now, correct? But what we have to do is we have to follow certain steps. If you remember, in the previous video we had discussed about types of accounts and we saw the transaction. Then in the transaction we broke down the two entries, the two sides, you could say, debit and credit, correct? And then when we broke down the different accounts, we also saw whether that account was personal, real, or nominal. And then from that, we identified whether that account should be debit or account should be credit. Fine. Same thing we are going to follow in the journal writing. Only thing, a last step will be the entry of these transactions into the journal with amount. So first, identify transactions. Second, find out the accounts involved, whether it is personal, real, nominal. Then apply the rule for that accounting. If it is personal account, what we say, debit the receiver, credit the giver. If it is a real account, what do we say? Debit what comes in, credit what goes out. And third account, nominal account, says debit all expenses and losses, credit all incomes and gains. So we know the three rules of those accounts, and once we know that particular rule and those transactions split into different accounts, next step is, once we know what is debit, what is credit, what will be our step, is nothing but putting down these accounts into the journal in the specific format. Okay. Now what we are going to do is we are going to see different illustrations. These are on screen, you will see there are two different illustrations which I have shared. Now also remember that these two illustrations are given in a PDF format in the description of this video. So if in case you don't want to refer to the video illustrations, whatever are uploaded here, you can also go to the PDF, download it and keep it handy. So as I'm solving the question, you will understand it very clearly. You can match these transactions with the answers I'm going to put on screen. We have to start with this illustration 1 that is given to us. What is the, what is this particular illustration stating? It's stating that record the following transactions in the books of Mr. Satish for the month of May 2023. So we are recording a journal basically, right? They've asked us to record in a journal in the books of who? Mr. Satish for the month of May. Different dates are given to us and different transactions are given to us. Now, what is our job is to break down this particular transaction. Suppose I say started business with cash rupees 1,50,000. Now, if you remember, we are supposed to write from the angle of business. Business is getting cash from whom? From Mr. Satish. Satish is the proprietor. Satish has given business 1,50,000 rupees in cash, and then this particular transaction has happened. Okay. So how to record this transaction? Now, if you remember this particular part that we had taken the transaction saying started business with cash. So business is started, meaning cash has come into the business. Cash was one account. Second account was business is started, meaning Satish's capital account is invested. These were the two accounts. Satish's capital account is invested. Now, nowhere you will say that Satish's capital account is mentioned, correct, in this. Is it mentioned here? No. But still, we can write Satish's capital account. The reason being because we are knowing that what is brought into the business is from Mr. Satish. Because if you see this particular part, it is very clearly given that Mr. Satish is starting the business, correct? So now, once you identify these two accounts, what do? You say, okay, cash account is a real account. Satish capital account is a personal account. Cash comes in because we are writing from the angle of business. Now, business is getting cash from Satish. This is where many people get confused. They will say, why business is getting cash and why not Satish is, we are writing in the books of Satish. No. Satish is a separate person, separate entity concept. Try and revise this if you're still getting confused about it. Satish is a separate person and he is giving cash to business. And whose behalf we are writing the books? It is in the books of the business of Mr. Satish. Okay. So business of Mr. Satish is getting money from Satish in the form of cash. So business is receiving the money, cash is coming into the business, so cash account will be debit. Who is the giver of this money? Giver of this money is Satish. Satish account should be credited as per the rule of personal account. Debit the receiver, credit the giver. Now this transaction, this entire portion, this entire part of, you can say, the different accounts that we have identified will be then transferred into the journal. So before we write the journal, this is what you are going to do. Now, since you're new and since you're this probably is the first time you're writing journal entries, you can do this rough work. So this is like a rough work for you. No need to do this rough work every time. When you become accustomed, you become very much expert in identification of accounts. This is just rough for your first or the second illustration that you're supposed to do. We don't need to do this every time we write the journal entries. This is not compulsory, correct? This is just for your understanding, to be clear on how to write the journal entries without making a mistake. Hope that is clear. Fine. So now let's proceed to writing of the journal. How to write the journal? Now we know the format of journal says in the books of, right? So first we are going to write in the books of. Whose account are we writing? In the books of Mr. Satish. Now in the books of Mr. Satish means we are not writing Satish's account, we are writing the books of business, right? His business. So if you're getting confused, we are writing in the books of Satish. No, it's in the books of the business that Satish is running. Fine. Now we need to write what? The journal. So I'm going to put the heading as journal. Now we will be drawing the journal. Now I'm going to write in these columns. First is the date column. First is the date column, next is the particulars column, then is the ledger folio LF, then we have what? The debit column, which is the debit in terms of rupees, and second one is the credit column. We can also write it in rupees. Okay, if you want, you can also use the rupee symbol which has now come up, or you can just write RS, that's also fine. Now comes the first transaction, started business with cash. What was the identification that we have done? Date is May, right? We are writing in the books of this person in the month of May. And when has he started the business? On 2nd. What is the amount? 1,50,000. When I had done the rough work, if you remember, I had taken cash account debit and I had the other account which was Satish's capital account which was credit. Fine. Now what is my job is putting those same debit and credit accounts into this particular format of journal. Now be careful in understanding how to write the transaction in the journal. Here I'm going to first put is debit amount. Always remember journal, whenever you write all the debit amounts first. What was debit in this transaction was cash. So cash account, and I write near the ledger folio, I'm going to put a DR sign stating it is a debit. Amount debited, amount of cash brought in was 1,50,000. Right? Then the second part, dual aspect of accounting says we write debit also and credit also. So here I'm going to put credit. Credit, I'm going to write a little away from the margin. I'm going to write here to Satish's capital account. And the amount of credit, I'm going to put in the credit column 1,50,000. And here in bracket, remember, a journal will have a narration of that transaction starting with saying being capital invested by Satish in business. Invested by Satish in business. Or you can also write being cash invested by Satish in business, whatever you like. It's just like a short description of your transaction. There is no hard and fast rule as to what you put in terms of words, but it should give a brief idea of what exactly the transaction was all about. Now this transaction is over, so I just draw a line here. Fine. Next transaction I'm going to take. Next transaction says deposited rupees 10,000 into IDBI Bank Limited. This is on 3rd May. I'm going to write deposited into IDBI Bank. What are you going to deposit in this bank? Naturally, you're going to deposit cash, right? And what is the second account? Second account is IDBI Bank. So when I identify the transaction and when I identify the accounts in the transaction, what are the two accounts? Cash and IDBI Bank. Cash is what type of account? Real account. IDBI Bank is what? It's a personal account, name, right? IDBI. So name, personal account. What is the rule for cash real account. Debit what comes in, credit what goes out. IDBI Bank is personal account. Rule, apply the rule, debit the receiver, credit the giver. IDBI Bank is what, receiver or giver? It is receiver, correct? And this is going out. Cash is going out, so it will be credit, and receiver's account is always debit. So I know what is debit and credit in this particular transaction, correct? Cash is going to be credited and IDBI Bank is going to be debited because it is the receiver, right? Now, this same rough work which I've done, I'm going to put down into this particular, this same rough work which I've done, now I'm going to put in the columns of the journal. What was debit? IDBI Bank account was debit. So I write the first part is IDBI Bank account and put a debit sign. Second, what is credit is cash. So I write to cash account. Please note that I'm writing the debit DR sign, but I am not going to write the credit sign. That is how the journal is written. That is the format, correct? Deposited how much? 10,000. So I'm going to write the amounts here. Debit amount 10,000. Little below, ahead of this cash, I'm writing the amount of credit also. And if you see, both the sides of this debit and credit are matching. Debit is equal to credit amount. Now write the narration being account opened by depositing cash. By cash deposit. Right, and close the bracket. So that's the narration. Now again, as I told you, narration you can write on your own, no hard and fast rule. Draw a line below this, right, showing that the transaction is over. Hope this part is clear. So first what I'm doing is, first I'm breaking down these transactions into different accounts. Then I'm identifying what is the type of account, and then I'm identifying what is debit and what is credit. And finally, I'm writing these accounts into the journal format. Next now is purchased goods worth 15,000 from Manohar and Company. Now this is on the 4th of May. 4th of May, two accounts. 4th of May, two accounts. We have Manohar is the person who is basically giving the goods, and we are buying what? Goods, purchases. So what are the two accounts that we can have is, we will have purchases account, right? Then we have Manohar and Company account. Why are we not taking cash or bank in this case? Reason is because nowhere is it specified we paid Manohar and Company? No. Since it is not mentioned that we paid Manohar and Company, we need to just take Manohar and Company, assuming that we are buying the goods on credit. If it was written, purchased goods worth 15,000 from Manohar and Company in cash, then Manohar and Company is not needed. What we will have is purchases and cash. Got it? So in this case, specifically, it will be purchases and Manohar and Company. So let's put it here. Purchases, what type of account we say? It's either we say goods account, real account, Manohar and Company, personal account. Purchases, goods are coming into the business, so debit. Manohar and Company is the giver of those goods, so credit. Fine. So giver's account, credit. I'm applying the rules. If you're still confused, go back to the video, learn the rules well, and come back here. Okay. Let's take the first one now. Purchases is debit. So I write the debit part of the transaction first. Purchases account, debit. To Manohar and Company account. Amount that is stated here is 15,000. So I'm going to write 15,000 here. 15,000 here also I'm writing 15,000. And put the narration in brackets being goods purchased on credit. Why we are writing goods purchased on credit? Because nowhere it was mentioned cash or bank, and we assume that Manohar and company is the one who allowed us to pay later. Same process we are going to follow ahead now for writing the further transactions. So let's come to the next transaction. What is the next transaction? It is saying sold goods to Disha and company 10,000. So now again, Disha and company and goods are the two parts of the transaction. Disha and company and goods, or in this case it is sales. Why sales? Because they are saying very clearly sold goods to Disha. Can you see here? So if you can see here, it is saying sold goods to Disha. So sold, right? So sales. Sales, and the second part, whom are we selling the goods to? Disha and company. So the two parts of the transaction will be Disha and company and sales. So Disha and company, personal account. Sales, if we say goods, then goods is a real account. What is the rule? Debit the receiver, credit the giver. Disha is receiving the goods, so debit. And sales means when we say goods are going out, debit what comes in, credit what goes out, so credit. So I'm going to write this transaction now. How do I write the transaction? On 5th, I'm not writing May again and again, if you notice, right? Why I'm not writing again and again May? Because we are writing one below the other, and we have already put on top that this is the month of May 23. Got it? So now let's write the debit part of the transaction, Disha and company first. Disha and company account debit, and to sales. Okay, sales account, which is credited. We don't write CR if you have seen properly. Amount is 10,000. So I'm putting the amount here, 10,000. Here also I'm putting credit amount, 10,000, and write the narration being sold goods on credit. And now I close this particular part of the transaction because the transaction we have written and it's over. Okay, debit and credit. Transaction. Next transaction says paid rupees 5,000 to Manohar and company by check. Check is a very important word here, because check we are paying, we are not paying in cash. We are paying through which bank? Which is the bank we have opened? We have opened IDBI bank. So this bank we are going to take, and Manohar and company's account, right? 7th of the month. Now, if we see which are the two parts of the transactions, Manohar and company, because they are receiving money, right? And who is paying them? Business is paying them, but it is paying through bank. So IDBI bank account. These are the two accounts, right? Manohar and company is personal. IDBI is also personal. Who is receiving? Who is giving? Manohar is the receiver. Receiver's account debit. IDBI bank is credit. Okay. So very clearly, I have the transaction which is paid 5,000 to Manohar and company by check. So Manohar and company is receiver debit, Manohar and company account debit. Amount is 5,000. So I write here amount of 5,000. To who is paying? IDBI bank. So on our behalf of the business, IDBI bank is making payment. IDBI bank account 5,000. Being amount paid to Manohar by check. Amount paid, or you can just write amount paid by check, because we already have his name in the transaction. We don't write it again. So next transaction says paid. Okay, when the word paid is used, always remember we will take it in cash. If check is mentioned, only if check is mentioned, then we don't take it. Otherwise, we always assume paid means in cash. What are we paying? We are paying wages. Okay. So I'm going to take the part of this transaction in two things. One is cash. Okay. One part of this transaction, I'm going to assume it is going to be in cash. And second, what are we paying? We are paying wages. Cash is what? Real account. Wages is nominal because it is an expense for the business. Real account rule says debit what comes in, credit what goes out. Cash is paid, so credit. Wages is what? Expense. So expenses are debit as per nominal account rule. Now, how do I write this transaction in the journal? What is the date? It is 8th. I'm paying wages which are debited. Wages account is debit. 2. What is going out from the business? Cash. Cash account. How are we paying the wages? By cash. Amount is 2000. So I write 2000 here. And write the narration being wages paid in cash. Or just wages paid. Whatever you like. And close the transaction. Next part of this particular illustration, last transaction is saying furniture purchased for 10,000 and transport charges paid 500. Now this is a little tricky because we are having what purchases made? It is furniture. Now when we buy goods and when we buy furniture, there is a difference, right? If you remember, we have so pay attention. This is just an explanation for you to understand. When we buy goods, goods are like regular commodity. Or we can say traded commodity. So whenever I trade in something, whenever I buy and sell something, it becomes goods. It could be by a manufacturer, it could be by a trader, it could be by a wholesaler, retailer, whatever. But whenever I'm doing a regular buying and selling, that becomes goods for me or my business, let's say, correct? But if I'm buying something like a furniture, furniture is, whenever I'm buying something like furniture, furniture is something which is a long-term asset. I am not buying and selling furniture. Okay, this is very important in this case. Suppose a person is buying and selling in clothing, let's say clothes. This is the regular commodity they are trading in. So clothes become goods, and to store those clothes, when he buys a cupboard, right, cupboard, then this cupboard becomes furniture, and this furniture becomes a long-term asset. And for long-term asset, we write the name of the asset and not goods in the journal. We don't put it as goods. It is not goods, okay? Not goods. Why not goods? Because I'm not buying and selling furniture in this case. Nothing is given. When I say purchases made, sales made, then it is goods. When I say purchases made specifically of something, that means of furniture, of laptop, of machinery, then this becomes a long-term asset, and what we call that, that will be a separately created account like furniture account. Okay, in this case, so we are going to consider furniture account, not goods. It will be furniture account and not goods account. Remember this. So first account that we have is furniture account. So as I told you earlier also, when we started with types of accounts, I told you as and when we find something crucial for discussion, I will give you details there and then in the transaction. So this is one thing to remember. Whenever I buy a long-term asset, a fixed asset, then I write the name of that asset as the separate account. So this is furniture account. In this case, second account, how am I buying the furniture? 10,000 is paid for its transport, also 500. So purchases are made, nothing is specified as from whom I bought, have I bought it on credit. So if nothing is specified, I assume this is paid in cash. So both this has been paid in cash. So second account will be cash account. Now some people here would say transport charges will be a separate account or a third account. No, this will be only one single account because we are buying an asset. So another important tip or trick in accounts or writing of accounts is that we write the assets at cost. Right? This is as per the cost concept. We write the assets in terms of its cost. Cost of what? Cost of an asset till it is put to use. So this is one important thing that you need to remember. Till the asset is put to use, it will form a part of the cost. Right? Imagine you go to a shop, you buy a machine, and you have to come back with the machine into your warehouse or your factory, let's say, where you will assemble it, install, test it, check it, and then you will start manufacturing or making the goods. In such a case, what will happen is basically this entire amount, right from the amount of your acquisition of the asset till it is installed, it is having a testing done, all this cost will form a part of the head of account, that is machine or machinery account. It will not be installation charges, it will not be transport charges account, it will be nothing else, but it will all go under what? Under the head of machinery account or machine account, whatever you write it as. Why? Because of this cost concept of accounting. Cost concept says till you put the asset to use, whatever amount is paid for that asset, everything goes in the name of that asset. So in this example, the last transaction is on the 10th of May and we have bought furniture. So I write debit. Furniture is what? Real account. Cash is also real account. Debit what comes in, credit what goes out. So I'm writing here furniture, which is debit. Furniture account is debit. And what will be the amount? Now, amount, some people will say it is only 10,000. No, it will be 10,000 plus this 500 of transport according to cost concept. Have you got it? So here I'm going to write 10,500 directly. And this is as per what I explained here. Okay, that you have to, till it is put to use, you will take into consideration all the cost associated with the asset. So furniture to cash, 10,500, right? And being furniture brought or bought, purchased, whatever you write, being furniture purchased and transport paid of 500. Transport paid rupees 500. Now, why am I writing this separately 500? To know that this 500 was added in my amount here. Got it? So that's very important. So we have written the journal now. All the transactions are recorded. If you see, they are recorded in chronological order from 2nd to the 10th. This is how a journal is written, right? Then we are writing the debit side on near the margin. Credit is taken a little ahead separately and amounts are written in this format. Against the debit, an amount is put, against the credit, an amount is put. Okay. Comes the last part of your journal. This last part of the journal is also to be compulsory done, and that is the taking the total of the debit and the credit column below the transactions. So what I'm going to do is take the total of this debit column, entire debit column, and note it down here. Entire total of this particular part, which is the journal entries, is 2,02,500. I'm going to just take the total and write it down here. You can see that I have written all the amounts to the right side of the column. And then when I take the total one below the other, you will find them thousands and lakhs, whatever the case is. So it should not be mismatched. And this is how I write total here. And if you see both sides, the debit side and the credit side will have the same total, right? If this total is not matching, that means you have made some error in writing the journal entry. So you have to be careful. If this total does not match, you will have to recheck, right? If I've done any mistake. If you have done any mistake, you can rectify that and then you can take the total, which should match to 2,02,500. So hope you have understood how we solved this example. Now in this, you have to mark this particular transaction of furniture, because this gives you an insight and understanding about how the recording is done of fixed assets. Once you've done with this particular illustration 1, let's proceed to illustration 2 in the same manner, where we are asked to record the following transactions in the books of Mr. Adhir for the month of April 22. So different transactions are given in the same way as we have done illustration 1. We are going to draft the journal entries for Mr. Adhir. Okay, now Adhir has started a business, remember. Okay, so we are writing in whose books? In the books of the business of Mr. Adhir. So this is the first and the foremost things that you have to remember to avoid confusion. We are not writing in the books of actually Mr. Adhir, but in the books of the business that Mr. Adhir has started. So even though the wording says record the following transactions in the books of Mr. Adhir, we are actually recording in what? In what sense? In the sense of business that was started by Mr. Adhir. And the date is given April 22, correct? And different time periods, 2nd of April to 12th of April, we have different transactions. Same process we are going to follow. We are going to break this transaction into different accounts, then decide what type of account it is, personal, real, nominal, and then apply the rule of accounting and then draft the journal entries after we know which account is debit and which account is credit. Okay, let's proceed to the format of the journal that we had already prepared earlier. So in this case, we are writing in the books of Mr. Adhir. And here I'm putting, as the previous question also, I'm writing here business. So you know that it's not the personal account of Mr. Adhir that we are writing. We are writing in the books of Mr. Adhir's business account. Now, here we have the date, the particulars, ledger folio, debit and credit amounts, and we are writing for which month. Let us put down that first, April 22. Okay, year 2022. Now, which is the first transaction given to us? The transaction given to us is on 2nd of April, Mr. Adhir has commenced business with cash 80,000 and furniture of 20,000. So what is business getting from Mr. Adhir as capital? It is getting cash, right? This is the first thing. Second, that the business is getting is furniture. And who is the giver of this? It is Mr. Adhir. So there are 3 accounts in this: Adhir's account, cash account, and furniture account. Now, if you want, you can do the rough work on a particular page. I'm not going to do it this time, but you can do it at your end, where you'll write down the accounts: Adhir's account, cash account, and furniture account. What is Mr. Adhir's account? It is personal account. Cash account is real account. Furniture account is real account. What is coming into the business? Cash and furniture is coming into the business. So both of these are going to be debit. And who is the giver? The giver's account is always credited. Mr. Adhir is the giver. So Adhir's capital account will be the credit part. Now, in this case, if you see, the transaction involves 3 accounts, right? The first transaction involves 3 accounts. Whenever a journal entry is written, it can be written single. That means, let's say cash and this personal account, and furniture and Mr. Adhir's account. So we can have 2 journal entries in this, correct? One transaction is cash brought into business. Another transaction is furniture brought into business. However, since the credit part of this transaction is same, that means Adhir is the same, you can say credit part. What we can do is we can club this transaction together. So instead of writing, I'm just going to show you how it could be two transactions. It could be like cash account first, cash account to Mr. Adhir's capital account. This is one entry. Second is furniture account, because furniture is also coming into the business. Furniture account, this will be debit, and this will be debit, and the giver is Mr. Adhir. So this could be the two transactions that we have in this entry, which is on 2nd of April. However, if you see that there is a common factor here, Mr. Adhir, Mr. Adhir. So instead of writing two entries or two, you can say journal entries, what I'm going to do is I'm going to club it. This is debit, this is debit. I will write that first, and these two accounts I'm going to add up. Okay. This is basically called as compound journal entry. So note down this word, compound journal entry. This is a very specific type of journal entry, which is generally stated and explained to you differently. Here I'm just putting it because it's a very simple terminology. If you see, we are just combining two journal entries together. And what is that called as? That is called as compound journal entry, where there could be more than two debits and there could be more than two credits, or there could be more than two debits and one single credit, and there could be one single debit and two or more credits. Correct? That is how a compound journal entry looks. It's not a single debit and a single credit. That's the only distinction. And basically this term also, compound journal entry, you can note down and keep, and because this will be helpful for your guidance and understanding ahead. Fine. So let's proceed to write the journal entry now. We are going to write it in the format of a compound journal entry. How we write it? We write cash account, debit. What is the amount of cash that he has brought into the business? It is 80,000. And furniture is brought in of 20,000 worth. Correct? So here we write furniture account, debit 20,000. 2. What is it? Mr. Adhir's capital account, because that is common for both. And what should be the amount? Should it be 80? Should it be 20? No. It should be addition of these two, that is 1 lakh. If this transaction was separately written, I would write cash for 80,000. Adhir's account also 80,000 here. And I would write furniture here 20,000 and Adhir's account also 20,000, right? But here I'm going to club it together, and Adhir's account I'm going to write 1 lakh. Hope that is sufficient to understand now. So based on this, now what we are going to do is we are going to write the narration. The narration of this transaction will be being started. Always start the narration with the word being. That is how the format is. Being started business with cash and furniture. Never skip this particular part of writing narration. That also, if you're appearing for any exams, any particular examination, remember narration also is important. It carries marks. It does not complete, the journal is not complete without the narration. Okay. Second transaction. Look at this transaction on 3rd, opened current account in Canara Bank by depositing 15,000. Now, what are you going to deposit? Can you deposit apples and mangoes? No. You're going to deposit cash. So this depositing word shows that we have cash here, which is 15,000. And the bank, this is the second account in the transaction, Canara Bank. You're depositing cash, and where are you depositing cash? In Canara Bank. Never we need to write business account, because business is only the one who is writing these books of accounts. Business wants to know how transactions are taking place, how money is moving out, who is the giver of money, who is the person taking the goods, and so on. So many students I have noticed, they write business account in journal, never write business account in the journal, right? It's wrong, absolutely wrong. So in this case, we have two accounts, Canara Bank and cash account. What is Canara Bank account? It's a personal account. What is cash account? It's a real account. What is real account rule say? Debit what comes in, credit what goes out. From the business, this cash is going out, isn't it? Cash is going out. To whom it is going out? To Canara Bank. Canara Bank is a person. Personal account rule says debit the receiver, credit the giver. So here cash is going out, so credit. Here bank is receiver, so debit. Correct? Got it? So this is how I identified the debit and the credit and the transaction. And now next step is writing in the journal. I'm going to put Canara Bank 15,000 here on 3rd of April, Canara Bank account. Debit 15,000 and to cash account 15,000. Now, if you want, you can also write Canara Bank current account. That's also fine. I'm just writing Canara Bank account here. That is also sufficient. Being account opened, being current account opened, we can write. Okay. Current account opened. Current account is basically a type of bank account which is related to, you can say, a business operation. So whenever a business is started, we open a current account. When a normal person opens an account, it is classified as savings account. Here it is business. So business has opened what we call as current account. Okay. In some separate video, I will explain to you what is the meaning of current account, savings account, cash credit, overdraft, and all that. Okay. Right now, just remember it's a type of bank account for business purpose. Next transaction is on 4th. What? Mercantise. Mercantise means what? Basically goods. We are buying some commodities, goods from whom? From Mangesh on cash. Now here it is tricky. You will see you're buying goods. Fine. Goods is one account here, right? Second account, do we write Mangesh or do I take cash? There is you can say there is a trick here where you're saying on cash basis. When you say cash basis, you have already paid, right? On cash basis means you have already paid. You don't need to write or identify the name of that person. So Mangesh cannot be an account here because already you have paid off and there is no question of Mangesh coming into picture. So how, just imagine yourself going to a shopkeeper and buying goods. What do? You pay money, you take the goods. Transaction over. Will the shopkeeper write your name in his accounts anywhere? Does he need to note down that, okay, so and so person has to make a payment to me? No, he doesn't need. Why he doesn't need? Because you have already paid him. So you go to the shop, you pay by cash or you GPay that particular person, the transaction closes. Fine. So here there are only two accounts. There are two parts, which is one is goods, that is purchases, because they're saying bought. There is no sale, right? There is purchase. So purchase account and cash account. Purchase account, goods account is real account. Cash account is also real account. Debit what comes in, credit what goes out. What is coming in? Goods are coming in. Cash is going out. So what will be debit? Goods account or purchases account will be debit. 4th, purchases account, debit amount 5,000 and not Mangesh account. Okay, here since you have paid, it will be cash account 5,000. Right, being goods bought from Mangesh. There is no harm in writing his name in the narration just for your reference, but account is not opened because we already paid off Mangesh, correct? Transaction over, draw a line to show that we have finished with writing of this day's transaction. Next, 5th, What is happening on 5th of April? Returned goods to Mangesh 1000. Full stop is given. So one transaction is over here. Second transaction is withdrawn from bank rupees 5,000. Okay, two transactions are happening on 5th. Let us focus on this first part of the transaction. Returned goods to Mangesh rupees 1000. So what is happening? Is Mangesh going to come in picture here? Now, first you had bought goods purchases to cash. The same goods are being returned to Mangesh. Have they mentioned that Mangesh paid you the amount? No, it is not mentioned. We just say that returned goods to Mangesh. Fine. So when we are saying return goods to Mangesh, Mangesh account and goods account will be two accounts. Nothing is mentioned about cash. Okay. Or we are not even saying that the same goods which were bought on 4th are returned and Mangesh gave back 1000. It's not clearly given. So I'm just assuming the two accounts will be goods account and Mangesh account. Now, why am I not writing it directly here? I'll tell you the reason. Because here the goods account is not just going to be goods account, it will be classified as purchase return account. Purchase return account. Because we had bought goods here, na? Right? We had bought goods here, purchases. Now what are we doing? We are returning the goods. Goods are going out from the business, but it is not sales. Why are goods going out of the business? Because we are returning some purchases which were made earlier. So that's the reason goods account will be here named as purchase return account. Hope that's clear to you. Next part is Mangesh account. Mangesh account is because we don't know if he paid us that 1000 back. So we keep his account pending. What is goods account? Goods account is real account. Mangesh account is personal account. So who is debit, who is credit here now? Goods are going out. Out means it will be credit. Mangesh is receiver of those goods. So receiver's account is debit. So let's write the transaction on 5th. We have purchases returns. Mangesh is receiving the goods back. Mangesh account debit 1000. 2. Purchase return account 1000. Got the understanding of this transaction? The reason is because goods are going out, but in what format? Not in the format of sales, but in the format of purchase returns. So we write here being goods returned to Mangesh. Next. Now, next is on same date, that is on 5th, we have another transaction where we are doing some transaction in the bank. Okay, if you can see on 5th, same date, but second transaction. In the question, you will see second transaction here. I have noted withdrawn from bank 5,000. What do you withdraw from bank generally? It will be cash, right? So cash is one account and second account is bank. Now, what bank do we have? Canara Bank account. So instead of writing bank, I can write Canara Bank account also. That is fine. How much? 5,000. On which date? 5th. So same date, I am withdrawing cash. Cash is coming into the business. So cash real account. Debit what comes in? Withdrawn cash. So cash is coming in. To bank, or I'm writing Canara Bank account. You can also write bank account. There is no harm. And amount withdrawn is how much? 5,000. Why am I putting Canara Bank as credit? Because bank is the giver of money in this case. Okay. Being cash withdrawn. And close the transaction by drawing the line. So after every transaction, you are supposed to draw a line. Next now. Next date is on 6th. What are we doing? We're selling goods to Madhav 6,000 on credit. Very important word, credit. So credit means Madhav is still not paid us. So very clearly this transaction mentions that Madhav has not paid us. So what are the two parts of this transaction? We are selling goods. So goods, sales and Madhav. Okay. Sales goods account is what? Real account. Madhav is personal account. Sale means goods are going out. So when they're going out, it is credit. Madhav is receiver of goods. So his account is debit. So 6th of April, Madhav's account, 6th of April, Madhav's account, debit 6,000 and 2 goods account. In this case, goods are sales account, right? Sales account is credit 6,000. And I write in brackets being goods sold on credit. Close the bracket, right? Next date. What is the next date? Purchase stationery 1,000 and payment is made by check. So what are you buying now in this case? You're buying stationery. Are we buying goods? No. We are buying a specific thing for office use and that is stationery. They have not mentioned that this is our traded commodity, right? They did not say sale or purchase. Like here bought merchandise, return goods, sold goods. No. What are they saying? Very clearly, earlier I told you there is some account mentioned, it is stationery. Now, do I buy a pen and keep it for the next 10 years in my office? Not necessary. Like stationery is a regular day-to-day expenditure. Like if I buy printer papers, then what do? I use it up. So it has a short life in my daily expenditure. So stationery is what? An expense. Printing and stationery or stationery is expense. It is a nominal account. Okay. And payment is made by check. Check we don't write, we write bank. Check is not some terminology which will be used, but it will be stated as bank. So second account is bank. So we have two accounts, stationery, nominal account, bank is personal account. Check does not pay us. Who pays us? Bank. Correct? Check is just a instrument. It is not a actual person who is giving us any money. Check is an instrument. It is a method by which the bank gives us money. So two accounts involved are stationery and bank. This is another area where students make mistake where they say check account and stationery account. No, check is not an account, please. Check is just an instrument. Remember this. Fine. So on 7th, we have stationery and the bank and 1,000 is paid. Stationery being nominal account, it is expense, stationery account. Debit amount is 1,000. And who has paid on behalf of the business? Bank. So Canara Bank, we can again write account 1,000. Here you will write being bought stationery and paid by check. Right? Now, next transaction on 8th. Madhav returned us goods worth 500 and received cash from Madhav rupees 5,500. So now here very clearly, look at the 6th date's transaction. What are we doing? So, sold goods to Madhav 6,000 on credit. Now the same goods here, what is happening? Madhav returned us goods worth 500. So of this 6,500 was returned. That means there was some sales made which was returned, sales returns and received cash from Madhav rupees 5,500. So what is happening here? Madhav, we are receiving 5,500. So two parts of this transaction. One is the person Madhav. Madhav is doing what? He is giving us goods and he is also giving us cash. So another example of what we call as compound journal entry. So Madhav has returned as goods. Madhav is one account, personal account. Goods is what? Real account, and cash is also real account. Apply the rule and write the transaction. Madhav is giver, so giver's account, credit. Goods are coming in because we had sold goods earlier, now they are coming in. So goods are debit. Debit what comes in, so goods are debit, but we don't write it as goods because on 8th we are doing a transaction called as sales return. Correct? Sales return. The goods sold earlier were returned. So we don't write goods account, we write sales return account debit. That is 500. Second, he is also paying us cash. So cash account debit 5,500. And basically these two transactions are done by whom? By Madhav. Madhav is giving the goods back 500 and Madhav is also giving us cash 5,500. So in all, monetary value that he gave us is 6,000 and this closes his account. Earlier it was 6,000, this is also 6,000. So being goods returned by Madhav and cash paid. Goods returned by Madhav and cash is paid. Okay, hope that clarifies the transaction still here. Goods withdrawn for personal use by proprietor 1,000. Now goods are withdrawn for what? For personal use. Very important. Personal use. By whom? By the proprietor. Who's the proprietor? Mr. Adhir. Right? Adhir is one account here because who is taking the goods from business? Adhir. And goods are withdrawn for personal use. Personal use is not related to business. Correct? So it is withdrawal of what? The capital. I had explained this term in the previous video where we had spoken of capital account is withdrawn. So we talk about it as drawings. So on 10th of April, we have the transaction that will be one part is drawings. Who is withdrawing the goods? Adhir, right? So drawings account will be one account because the proprietor is withdrawing goods. And what is he withdrawing? He is withdrawing goods. So goods account will be the second account. Now drawings is capital going out. Okay, in a simple terminology, I can say this is capital going out of business. I had also explained this earlier as I told you, but for your information, I'm just telling you again that when the proprietor is using some things from the business on his own for his own purpose, it will be classified as drawings. When capital comes in the business, the person Adhir will be a giver. And when he is taking things out of the business, he becomes the, in personal case, he becomes the user of this commodity, user, or we could say receiver. Right? So when he is receiver, receiver's account is debit. So drawings account is also debit. Drawings account debit. And what is going out from business? Goods. Now these are neither purchase nor sales nor purchase return nor sales return. So I just put here as goods. Amount that is withdrawn is 1,000. So I write here 1,000 and 1,000. How do we write the narration? Narration is written as being goods withdrawn for personal use. Fine. So that's a very important thing. Now, once this transaction is over, I draw the line showing the transaction is done. I have the next last transaction now, paid 2 times of India for advertisement. Now, always whenever the name is introduced, people get confused. But pay attention to the transaction. This is where your art of recording the transaction comes into picture. We are paying. The word paid shows that there is amount already given. So cash has been given. Since check is not mentioned, so I assume cash. And for what purpose are you giving? You're giving it for advertisement, right? Look at the transaction parts of this transaction. Some may say even Times of India is involved, right? Yes, it is involved, but we don't need to consider Times of India because we already paid them. We don't need to remember Times of India because if we were to pay them something, then we had to write their name. We are not to pay them. The transaction is already closed. We paid cash. We took the benefit of advertisement. So matter is over. So two accounts involved here will be, one is your, the two accounts involved will be on 12th. One is advertisement. Advertisement is nominal account, expense. So debit amount is 600 and to cash because we paid Times of India. So to cash account 600 being paid for advertisement. Paid for advertisement or being paid to Times of India, I write. Whom are we paying? To Times of India. So their details have also come, but they've not come in the account, they've come in the narration, and that's fine. So transaction is over. I draw the line. Now all journal entries for the month of April, whatever they had given us, are over. So I take the total of the journal here, write the total, and you can close the journal for that month, right? And total comes, what is the total? Total comes to 1,40,600 on both sides. So we have drawn the journal correctly. There is no mistake because both sides are equal. And hence we can close this journal for April month. Fine. So I hope this is clear now how you have done the transactions and classifications have been done. So hopefully with this, you can have a clarification on how the journal entries are to be solved. Now, this is not the end of our journal entry journey. We have to learn a lot of different journal entry transactions. Like there could be more complicated ones which relate to discounts, which relate to loss by fire and all those things which we are going to move further. But before we go to those transactions, after this part 4 of the video prepared by Commerce GYAN in terms of basics of accounts on journal entries, we will also have one more video. We're going to have a next video which will be on source documents. So right now we have entered transactions into the journal. So if you remember, we mentioned that deposited cash into bank, right? What is the proof that the cash was actually deposited in the bank and I need to note it down in my books of accounts? That is where your question of source document will come. So what type of source documents are required for accounting? So this is quite useful even for the people who are doing business. So where actually people go wrong is they don't keep the proof of the transactions. Many a times, even in the taxation related assessments and such things, your source documents are missing and you face big problems and big penalties and interest and other things. So to avoid that, we are going to have a whole video on source documents. So after this video, then we will move ahead again to some more complicated journal entries. So hope to see you in the further learnings that are going to come up in the format of videos.